Uh, this is just a quick Elliott wave video on the S&P. I'm not a big buyer into Elliott waves, but I know a lot of people are, and I do pay attention to them. They're not a big influence, but sometimes they just have a remarkable. They just sometimes they work remarkably well. So this is that's another whole story. This big megaphone reverse symmetric triangle, right? This is the Elliott wave count, the way I see it, and I'm certainly not Robinson Crusoe, for the move from COVID, right? So the way I count it in levels, I do wipe out this noise here, just because that was quite a big liquidation event, and sometimes I'll wipe out a bit more of it. But for these ones, I'll try and stick to the closes a bit more in a bit more disciplined way. So the way I see it, this was wave 1 and this was wave 2. You can get into here a bit more like 1, 2, 3, 4, 5 in there. There are various ways of counting that one. To me, this is a pretty clear second wave, though, for a few reasons. Obviously, there's that trend in here, which was, clearly broken. So there's that. There was clearly a change in direction of the trend. So it wasn't just breaking that trend; it was, weakening. It was definitely a change. So there's that thing. It also pulled back to a Fibbo, pulled back just to the 23, right? A little bit deeper from that one right on. I guess if you stretch this down here, maybe bang on. It also struck a very strong RSI, overbought RSI in here. This one corresponds with the third wave. The way I see it is in 1, 2, 3, 4, 5, and you can see this is a typical wave 4, and it's been slightly sloppy and messy. This is a typical wave 2, it's a shorter, sharper pullback. This wave 3 is not the shortest, generally one of the longest one. There's probably some wave equality in there by the looks of it. So there's a few. So it makes sense that this was overbought on a wave 3 of this first wave, and then this first wave finished with it being heavily overbought there. So there's a few reasons why I think that's like a a wave 1. And then if we kind of project where wave 3 goes to, right, from that first wave, that's got a 1-to-1, like a parity relationship from wave 1 to the third wave, right? So that third wave, one of the Elliott wave, Elliott wave 3 is your wave 3 can't be the shortest. This wasn't the shortest. It was the same length as wave 1, which is legit. So that was that one. This move back in September was again quite a clear, to me, like a change, like a wave 4, a change of the wave. A similar reason in that you can see how it really did break this trend going back there. I should put this one back in just for completeness, right? So you can really see how it's quite a clear 1, 2, that was a change of gear. 3, this was a big change of gear. And again, when it breaks through, it really is off. When it breaks through, it was clearly off. There was also a bit of a pullback here to the Fibos, almost cracked the 23. Didn't quite. Very bullish market. Again, wave 4s can be a little bit sloppy, and in this case it was there. So that was wave 3 and 4, the way I justified. Wave 3, it wasn't overbought on the dailies, but on the weeklies it was overbought. So you can see here, right there. So on the weeklies, from that high move, this was actually the peak in terms of the RSIs, right on line with that wave 3. And again, wave 3, generally the strongest, which it was, peaked in the momentum there. Wave 5 weaker, you can see the RSI had come off the boil, bit of negative divergence there. And of course, going back to the dailies, where did wave 5 finish? It was a shorter wave 5, and it peaked at the 38 relationship of that whole move. So that to me is very clearly, and again here, that's a definite break. So the way I see it, we've definitely had the completion of that 5-wave sequence, and that's why. To me, it's always a bit of a mystery, like how people come up with these wave counts. But when I look at it, there's whether it's confirmation via the RSIs, just simple trend line analysis. These wave equality relationships, they all, to me, add up to say we've had the 5 moves. Now, after the 5 moves, then the theory goes we should have an A, B, C, and that's what we're in the middle of. So I guess the whole point of this is, where is this A, B, C going to go according to the Elliott wave theory? Now, to me, that's a pretty clear A and B, and if we look at some of the retracements, look, that is bang on a 61.8 retracement, right? So to me, that's a very clear A and a B, like a deep retracement, but 61.8, very, very normal, bang on in terms of the theory. And then the next, let me just put that one back. And then the next question, of course, is where does this wave project to, right? And if we line it up, it really is, look at this, it is bang on, if I get it right on there, bang on 4,000, right? So that is from the peak here, like the ding-dong up there, to the low here back in January, end of January, to the peak here that we saw just at the beginning of February. So to me, the target, according to this, is very strongly 4,000 at least, possibly lower to 3,600. Now, the interesting about the 4,000 is, out of all these moves here, really, there's a few little gaps here, but pretty much all these gaps, this price action, pretty much all of it has been retraced, except for this gap in here. I think we can see more clearly if I go down to a 4-hourly. And that has always bugged me, being, not that I'm OCD or anything, but you can see how this price action, it was unlike what we've seen in pretty much anywhere. It was just very vertical, and it never really filled that gap. It was just like up, right? And that's, that was a reasonable, that's like 100 points. That was pretty punchy back then. And that is right around that 4,000 thing. And for it to bust through, I was swapping some Twitter things with this guy, James Stanley. He's good. Look him up on Twitter. He does his stuff. He works for, I think it's FX Daily that he works with. But there's 2 guys that I've come across on either Twitter or YouTube. One of them is this guy, Chris. I think his name's Chris Lewis from Daily Forex. He runs another blog called The Trader Guide, I think it's called. Yeah, Christopher Lewis. He basically, does a bit of freelance commentary for a few sites. He's good. He's been in the markets for a long time. He's university qualified. He's good. There's this other guy, James Stanley. He's worked at Merrill's, Fidelity, Ameritrade. He's university educated. For me, all those things tick the boxes, right? They're not anonymous. they're not just lone wolves. They work with other people in reputable places. University kind of qualified, and they've had a long-term experience, typically in the game, in the profession, right? They're not just like kids who've used to work as like pizza delivery drivers, right? Who are now doing this to sucker people into their shitty little free courses. So those guys, if you don't like what I do, get onto those guys, James Stanley and Christopher Lewis. Look them up. You'll appreciate their stuff. They know what they're talking about. They're the two guys, like after months of looking for it, they're the two guys that I've narrowed it down to that I listen to and respect. If you're listening, you two guys, all the best to you, man. So I was swapping notes with him, and he had some comments on this about saying how it just busted a psychological level, which it did 4,000. That's a big one, right? And it just didn't really look back and never come back. And it was there's a few things going on in the market at the time, but it was just strange how it just busted through. Now, the danger in that kind of price movement is just as there was great enthusiasm, which was never challenged, right? They're never really challenged. It's great enthusiasm that was never challenged, right? When it comes time to challenge it, typically they'll chicken out, right? And you get a sharp move up, you get a sharp move back. And I do think we're starting to see that here, right? I mean, obviously there's a trigger in terms of what's going on in Ukraine, but the market was ripe, right? Well before Ukraine, the market was ripe, well before Ukraine, for it to have a pullback. And Ukraine is just a trigger for an overstretched market. And I think that's the thing with technical analysis. It's not like it can predict events, but it can give you signs for when the market is kind of cooked and it is susceptible to reacting in a particular way to some event. I guess that's what it kind of says. And in this case, the event the event's been some like inflation numbers, but the event today has been Ukraine. Technical analysis doesn't tell you what that event is. It just says, look, if there is an event that this market is susceptible to it, and if it happens, then this is likely where it's going to go to. So that's my little Elliott wave thing for today. And I said my best guess, or the way I'm positioned for it to come, where the market I think it's going to come to, very, very high chance, and I'd say almost dead certainty it's going to come to around about 4,000. I view that as a 100% chance. If it breaks that, then the Elliott wave theory would say, look, it's coming back to 3,600. I guess the interesting thing about that level is, here is, around about here is the last time we had some challenge, real challenge in the market as far as buyers versus sellers, this whole band in here. And that does coincide reasonably close, 3,630 versus 3,570, so within 60 points, half a day's trading, those levels. So I think if it hits here, that's a 100% chance. If it breaks this, then I can't see really what's going to stop it until it gets to here. And that will be a very healthy pullback all around. Let's just see how it fits in with some of these Fibos. Yeah, right. So it's coming close to like a 50% retracement of that move. That would, again, that kind of fits pretty well with the Elliott wave theory. I mean, that's, again, in that 50% is right in the heart or right in that sweet spot for this price action where there was the last real significant resistance. And it was significant resistance, right? It had like two strong bounces off it. There hasn't been anywhere really where we've had two strong bounces off anything like this whole way. That was the only point of significant resistance. So to me, that says that is probably going to be the next significant point of support. Particularly with these things, that one busted now. I mean, I think nothing comes close really between that and this as far as support and resistance. That is a gap, right? Dangerous. You could say maybe there's a bit of support resistance, but maybe in here, but really to me, that's the major one. This was a major one. This one's busted. I think there's definitely a chance it's going to head there. I'd say 100% chance there. And actually, I was putting this the other day as maybe like 20%, 25% chance of getting there. I don't know, but to me, I certainly wouldn't rule it out, and it would not surprise me one iota if it got there. All right, look, that's it for my S&P little rank amateur Elliott wave theory for today. Ciao.